Evening, ladies and gentlemen. Casper here, aka Uselink, and we are going to be looking into the Twitter stuff. What have I found very interesting for the past few days? And in advance, I haven't slept for like 2 days due to the little one being up all night, so I'm very tired. But anyways, I won't let you down. I will. I love to do these videos anyways, and yeah, let's get straight into business. As always, these guys I follow on Twitter. I urge you to follow them as well because they give different takes, different views with different techniques, and it can help you do your own or make your own assumption of what you think is coming. So it's always good to get different kind of techniques and bullish and bearish views on what you are into as well. So I like these guys. Follow them, every single one of them. They will not let you down. All right, first one here, Edward Govsky, GLD Gold, the Bull View ABC Fractal. Setup, just sit back and wait to see if gold can indeed break about above 19 or 2100 on a mega volume. And then at that point, the gold and silver floodgates will be open for the bulls. And yeah, this is the bullish take, obviously. When we can get above that 2000 and $2,100 level for gold, that is indeed the all-time highs, just a tad above. And then we have no resistance, no nothing, just purely air above all previous price action for gold. And yeah, that's exactly what I think is going to happen here. But I expect a lot of pushback at that $2,100 level for gold. Grady, a global asset paradigm shift is in the making, away from equities, bonds, USD, and towards tangible assets. This ratio has yet to break out on a daily basis, but here on the monthly chart, it has broken out and is now back testing it. Beautiful 15-year long falling wedge in the GLD to SPY ratio on a monthly close um, level here. And you can clearly see we're breaking out and retesting, and we now have that horizontal breakout high at roughly 5 in this ratio. So getting above that, that should indicate that the gold is a lot more attractive than the SPY. Again, I expect a lot of pushback in order to break that 5 ratio level. But again, in my honest opinion, it is going to happen. We are in that decade where gold and commodities will do fantastically well. Rashad here, senior gold miners, the GDX, broke out from a half-year-long descending wedge. You have it right here, beautiful symmetry. And it broke out, held at the retest, and it is a classical pattern here. GXD should surge higher on the over the coming days. Also, I'd like to point out you can see here across these highs here is all aligned at roughly, let's call it, where are we? Just a tad below 31. So that is the level to look for. If we can get above that, then this wedge here is uh, is confirmed with the breakout retest resumption, and we should be heading up to the highs here of the upper trend line here at roughly, where is that? $36, $37. If we can get above that, these highs here, then it's all confirmed in my view. Again, confirming what gold might be doing here over the next quarter. Jake here, beautiful bear flag breakdown on oil. This is what the market needs for upside. So this was yesterday, I think. Not 2 days ago, you had this bear flag breakdown on oil. We have also on the channel, when we look at oil, we made the one of the path that this was and it's going to be an A and B C correction here with a potential target at roughly 74, 75, which also aligns with the massive breakout trend line that we have on our charts when we look at it on the weekly basis here on the channel. So it makes perfect sense that we could go all the way down there for oil. Jake again here. Yes, so far the previous resistance zones is holding up as strong support. Again, I want to show you that sometimes all you need is one trend line or one horizontal support and resistance, and you have actually your levels to look for, and you're buying when you come into that support. You're buying again. If we dip below, then it's resistance, and sometimes you can just keep it really simple with one line, maybe two, no indicators, no nothing, and you can be highly profitable by just keeping it very simple, just like Jake has done here again. I love seeing these very simple charts, but it makes the picture so clear in my view. Oh, yet another one by Jake. I can see here. GLD gold looks like a huge, looks close to a huge breakout. Indeed, indeed, indeed. Same thing for the gold chart. Again, we have this uh, rising trend line, parallel trend line zone here coming up, and we have the horizontal level at roughly just a tad below 190, 185 to be just a bit more precise. But again, if we get above there, it's it will be a massive breakout for gold or GLD in this case. And that's where we're going to see all-time highs for the good old gold. North Star, Kevin here, breaking. PNC Financial Service falling below major technical support, underlying the debt issues, unrealized losses in the sector at risk of causing a systemic event. And what is he talking about here is that the bonds that they're holding, the value that they have is just getting decimated due to the rising interest rates. And you can clearly see here again, this is a bearish view on the PNC here. Again, we have had this long-term uptrend here. Funny enough, it coincides with the with 2000 and excuse me, at 1981, where the bond bull market began, and it was in an uptrend ever since, more or less. And now we are below, grinding it here, and now we're finally going to break down here again. I will say this, that when we get about below 85, that's the confirmation, the big confirmation, because you have the highs here, all this cluster, and again, you can see the wicks here at the 85. So 85 is a massive level. But if we get down there, I think we're going to have a move up here before rolling over again, making a massive head and shoulders top right here. So yeah, again, banking sector with these high interest rates, they are definitely feeling the pain with the unrealized losses that they have on the books right now. It's a massive amount, really. Transpider, GLD, the golden chalice here, and again, very simple, one horizontal line. Yeah, exactly at 185, and you have a standard, one of the most bullish setups that you can have, a massive cup and handle. Again, you can do your own projections. It's quite easy. But anyways, this is, until proven otherwise, a very, very bullish setup for gold. And this points to 3K on the gold chart. And again, with my bias and what I'm seeing in the markets, that is where we're going. Inflation is going to stay high, again, eroding the currencies, the fiats. Gold is going higher. Gold is going higher. URA knocking on heaven's door. This is Jay Hinster. Again, massive downtrend this is actually from the Fukushima highs. The downtrend started way higher from 2007, but we're coming all the way down, basing out. And when and if we can finally break above here again, then you are in a massive monthly uptrend for the uranium miners. So yeah, I definitely agree on this one. Again, I'm the most bullish on uranium by far at the moment. So it should reward us quite heavily again. Same thing again here with Kevin with the U.S. bank court. Breaking U.S. bank court, major technical breakdown, underlying the debt issuance, unrealized losses in the sector at risk of causing a systemic event. Just like we looked at before. Quite similarly, it goes back to, again, just when the 80 started, massive uptrend again now. Breaking down, retesting the highs, double top, breaking down. Again, the level to look for is roughly around 31, 30, yeah, 30 to 31. Again, I do expect some sort of bounce here, and then we might roll over big time here for the banking sector if rates are to stay high. I completely agree with Kevin. Tavi here, I'm not going to read it all, but anyways, you can see the gold here in relation to the 10-year yields during the 1970s, where we had similar inflation rising levels as we do now. And you can see here people are at some point in time, higher rates is not equal gold going down, because that often means that the inflation is higher than the rates, meaning that that inflation is still higher than the coupon you get for buying a 10-year treasury yield here. And that's where gold thrives. Inflation being above the rates, that's exactly where gold wants to be. And yeah, we could, over the next decade here, we could definitely see similar things here with higher rates and gold going higher meanwhile. Asugar here again with a beautiful chart of silver. Silver, nothing happens, but when it happens, it yeah, all at once. And I completely agree. Mentioned many times here as well on the channel and on Twitter that, silver does basically, I wouldn't say nothing, but for like 95% of the time, it just doesn't do anything. And the moves to the upside will happen in the last 5%. Just like we saw, previously, like here in the March 2020 lows, we had like a few months of major upside where we went from $10, give or take, all the way up to 30 in half a year's time. And now we have been consolidating, bullish consolidating for 3 years. So yeah, again, when and if we break that $26 level, which in my view is the big level to look for, then we will have a similar move here again, where all this pressure here is going to get released, and we're going to spike big time, way into the 40s within, again, half a year, give or take. Same here again. This is also, you don't have the entire picture, but this is 2010. We finally broke the trend line coming across here, and you can see here, whoop, in like 6 to 8 months, we went from 17 to 50, and we will see the exact same picture again here for silver. Great chart. I like it. Volansky here again. Relative to some other U stocks, UUU's price is lagging a bit, although its MACD looks good. Perhaps we'll see a big pop soon. And again, he's using the MACD indicator. Again, I'm not very familiar with it. I don't use it often, but anyways, the shorter term indicator is crossing the longer term here, again, suggesting some more upside here for the good old energy fuels. Again, I think the uranium sector is looking absolutely fantastic long term. There's no doubt about it again. And then we have this guys here, Uselink, one handsome guy here saying that the NVIDIA 4-hour log here, NVIDIA is giving the middle finger, and I found that very funny. You can also note the neckline here is getting broken. And if this is the big breakdown for NVIDIA, as mentioned many times, maybe even two previously, I did it over here, but again, half a year later, the gap will get filled. That is for sure if this is indeed the big breakdown for NVIDIA. Same guy again here. Gold in world currency units on a weekly on a weekly closing basis here. So this is where it takes in all the fiat currency and adds them together somehow. You can see here clearly, on average, gold has broken out here again. Retest, resumption, and yeah, the currency in the gold in the USD is always the latest or the last currency to pop for gold, and we see the same thing again here. We're currently sitting at just below 2K, only like 4% below the all-time highs. And when the final one gold in USD gives in, that's where you see gold in all currencies just go bonkers, really. Yeah, that's all I had. Some beautiful charts by some great accounts. Again, follow these guys. They will give you some good content and some good stuff to think about. And yeah, have a great day, guys. I enjoyed being here as always. Have a great day, and we will see you in the next one. Cheers, guys.